All right. Hey, welcome everybody. Thank you for joining us here today in the PUG monthly meeting. One of our main questions today, you saw me, first off, before we begin, I just want to make sure that the sound quality is good and the visual is good. You should be seeing our radar screen in front of you, and my voice should be loud and clear. So if I could get all good to go. Hey, great. Thank you, everyone. All right, so a lot of things happening wonderful here with, and when I say wonderful, I don't mean that just in general vagues. I mean, the markets started off the year pretty decently. We have a couple things that we've done with our live trading room, like we switched platforms. We're building out the trading room to be more conducive for two different types of traders. Those interested in stocks and equity ETFs, and then algo trades, and taking a look-see at our algo program with algo 17 and the structural changes that we get from our buys and sells, and people can look to piggyback those trades. We'll get through that in a few minutes. The focus in today's session is last conditional change, the LCC indicator, because it was the topic that actually Jim had sent an email in, and the email states, and we're going to cover this one first and foremost. And so before we go forward, before I throw Jim under the bus, we don't like to give out last names. We'll keep it anonymous, but he really does exist, and he did send, and I printed it out, a real email. So with that said, how many of you understand fully last conditional change? Number one. How many really use it? Or I guess a better question is, how many people don't understand what it is and are willing to want to learn a little bit more? So if you can just type in want to learn, don't know, love it, whatever, hate it, what are you talking about? Who in the hell are you? I mean, whatever. Okay, so excellent. We got to love it, and then the rest want to learn more. Wow. Because let me tell you something. It's phenomenal. It's actually obnoxious. It's so phenomenal, it's obnoxious. Why do I say obnoxious? Because when you're looking for a market to break out and it doesn't get above a last conditional change, sure enough, man, that's like the high of the move. And it was something that I wrote about in my first book 15 years ago. So we're going to get right in it. On the screen, I put in exactly... and the question is, ignore that this chart, because this individual actually sent me a chart on the mini Dow, and he said, ignore that it's an 89 tick chart. Okay, I'm going to ignore the fact that it's an 89 tick chart on the mini Dow, but it reflects a great picture of LCC bullish and LCC bearish coordinating with the volume indicator, the John Person volume indicator. Just discuss how you would trade this chart. I recognize that our markets are lacking rhyme or reason at the moment, but I personally use the JP volume indicator as he looks for prevailing bullish or bearish sentiment. And so we've got twofold things, the specialized volume indicator and LCC. So we're going to talk about both of those and how we use them to trade. So first and foremost, let's get into this chart that I actually took the liberty, if you, just to let you know, you don't think I read emails. Not only do I read emails, but this pretty much represents the chart that was sent to me by email, I believe, and it starts in this particular email at 12:30 and 21 seconds. So I believe 12:30, somewhere in here. So moral of the story, how I would look at the two different concepts is, whether this is an 89 tick, a 5 minute, regardless. Two things that I see that are important here. And let me get one more thing up and running before we really begin. So hold on. Let's hold on to our horses. Let's see if I can get one more. I think it's for educational purposes. A drawing tool works pretty well. So we're gonna do that real quick. Bear with me. Might take another second or so. Shouldn't take that much more of a second or two. go. Let's go over here, and we're going to do a little Camtasia drawing tool, and we'll get this going here. Excellent. We're almost there. Or maybe not. So we're just going to move forward. All right. What I wanted to focus in is the PPS. What you see in your screen is a couple things. Daily pivot, which it's hard to get it in line on a tick chart, but believe it or not, we have person's pivots. Red is resistance, gold is the 3-period pivot point, moving average, and blue is the actual pivot derived by HLC, high-low close divided by 3. And this is a blue below gold. It's deemed to be a bearish kind of neutral trading environment for today. One reason we come to that conclusion, I'll share with you in a moment, is namely because the projected resistance red line was higher than the prior day, and the projected main target support was lower than the prior day. The question begs, how do we trade last conditional change and combine with the volume? So we'll expand upon this area here and the last conditional change. Last conditional change is a tool that identifies a bar that moves below a certain value, and if it closes below the prior bar's low, then that current bar's high becomes resistance. And so we have created a tool that draws the lines. Now, one of our students, and this is what's really cool about our community, because we get some really good inputs from our students, and we call this the Ruth color, because Ruth, I don't want to throw her name, last name under the bus, but Ruth had made a point that, hey, I can't tell the difference between white and gray. That's gray and that's white. Gray is resistance and white would be support. So she added a little function of magenta. So we call it the Ruth color. And it actually did add a lot of value. And you could clearly see that when a market generates a sell signal, or when a market is topping out, it creates this little line in the sand, and that fuchsia and gray dotted line is resistance. So that's the last conditional change. If the market was truly good to be bullish, it would need to close greater than that for an upside momentum trade. Now we're using an 89 tick bar, guys, for ladies and gentlemen, for day trading purposes, right? And so we're more in the mood for a scalp. So how do you improve the odds with a lot of maybe other filtering mechanism? Maybe you have a stochastics overbought, oversold. Maybe you're looking at trading around pivot. Maybe you're looking at a daily chart against or 60 or a higher time frame. Whatever other filter factors you're using, when we're looking for a trend change, and define a trend change. Well, if the trend is going down, as in the case of this time frame at 1227, we're looking for a dynamic shift in momentum of price. Something has to happen, and I call it magical. Something magical has to happen. In the first case, we note that as the trend of the market is moving down, and we're going to define the difference between the specialized tools here, between on-balance volume and the John Person volume indicator. This volume indicator is twofold. A, it defines the trend of the volume. It has a moving average component, but this does not generate or denote the change in actual volume versus the change in volume in terms of percent. It also has a momentum histogram behind it, similar to what was created with moving average convergence divergence. So when we generate, or there's a sell signal generated and the trend is defined as starting to break down, you can say, is the trend moving down on an accumulation or a degree of strong volume? In other words, if the trend is going down, the volume trend is pointing in that direction. All of a sudden, when we get a trend change or a direction in trend, there's a couple things that we would want to note. A, is the market closing greater than past prior bars and a last conditional change? And you can clearly see that we had a last conditional change, albeit very small, but it was, and I'm going to highlight it with this little yellow line right there. You can see that it was created by the high of that bar, and then all of a sudden the market closed greater than, and there's your little PPS buy signal to confirm that it was a reversal of trend. So you had a buy signal. Notice what's happening with the volume. The histogram component of our volume indicator, the lows, are starting to get higher. And you can see the green bar is starting to shift higher. On balance, volume at the same time had a 1 bar uptick. So it's kind of hard to read, but this gives you an inclination that, you know what, the momentum of the selling pressure is drying up. Now, the market broke out. You can look and act at this as a buy signal in of itself and go at the market, or you can look at maybe trading a stop-in function by saying if the market moves higher and stop in by taking a tick above or 2 ticks above the high of the bar that generates a buy signal. That's another order entry method to confirm that the buy signal is valid. If the market is going to move higher, you would want to see what? A consecutive series of higher highs and higher lows. Oftentimes, when there's a buy signal and it fails, oftentimes you get an equal and opposite. It doesn't take out the high, and the market goes straight back down. So you get a false buy signal. So by entering and waiting, sometimes you can get a better entry in price or maybe a pullback in the marketplace. But what we're doing is we're looking for confirmation that there is a shift in the trend. The market was in a downtrend. It went from up here to down there. We want to know what happened that would cause the market to want to move up and cause us to trigger a call to action to move into a long position. For confirmation purposes, we broke an old last conditional change high. We generated a PPS buy signal. We see the momentum of volume is improving and the volume trend starting to move higher. So this would initiate a long, and now notice that the bar that I'm pointing to has closed greater than past and prior highs. And so you'll notice that there is a white line in the sand. This new white line in the sand is what we would call a bullish, or in this case bearish, but it's bullish because the trend is up now, and we can use that white line in the sand to place stops below that line in the sand. We don't want that line in the sand to be violated. As the market starts to trend higher, you can see that a new candle creates another what? White line in the sand. So then you can move your stop from below that white line to below that white line. And as you're starting to see the trend move up, more importantly, you're seeing something extremely positive occur. The momentum of the volume went from red, and there's a 0 line histogram crossover. That's positive. So with that said, this gives us a positive reading that there's a shift in the volume, and it's starting to show strong accumulation. So it means that you got in the shift of the change of the trend early, and now more people see the same thing, and there is accumulation of participation in the market. That is huge. So the trend starts to move up. On balance volume, while it is good, and I'm using the two in comparison, what makes my volume indicator so special is it has 2 parts to it. A momentum component. B, the actual volume trend, but instead of in terms of real volume, it's percent change of volume. And that's what makes this more of a sophisticated state-of-the-art indicator, kind of because of the fact that there's so many different ways that we can mask volume nowadays. On balance volume is a good tool, but it's not as efficient as it once was. Now, I'm going to give you a prime example of that as we follow this trade and we look at how would I use and how do I use my own tool for this exact purpose. As the trend of the market starts to move up, we note that eventually it's going to run out of steam. Someone's going to want to take profits. Someone's going to bet that it can't go any higher and sell short. And so therefore, we start to look for changes in that volume action that denotes sellers coming in or supply coming in at a specific price. So the funny thing is as we expand the charts together, especially the graphs depicting the volume, note what's happened. The price moves up and we have a last conditional change. So if you're using last conditional change, the white lines to trail your stop, more than likely you would have been stopped out right here. Does that initiate a new trend change in the marketplace? Well, look at the volume action. Right before this bar stopped out, the momentum as the price was rising, the momentum of the volume was starting to do what? Turn less positive. We make lower highs. So that's why I'm really expanding upon this area here. The time frame would be 12:38 and 54 seconds. Now, on balance volume had a little downdraft. Okay, because 2 bars, you move lower after 2 bars. Lower in the sense that you have 2 red candles. Red candles denote what? The close is less than the current bar's open. Red candle. The next bar forms a lower high and a lower low, and the market closes below the low of the candle. Red candle. So you have a small pullback after an uptrend. Our volume indicator has not turned expressly negative. It hasn't had a 0 line crossover yet. But here's what's very interesting. The market gathers another thrust to the upside, and this may entice traders. And I'm going to focus expressly on that zone right there, if I may. Don't think I can go back in time enough, but if you notice here at 12:41 and 46 seconds, the close of this current bar is higher than the close of the bar that I'm flashing at. Higher high. On balance volume at times is now giving or generating potentially a false sense of security, as I call it, because the on balance volume reading, as the market made a new secondary higher high, it's reflecting there's volume participation in that move. So what's happened, I think, and what I utilize the 2 tools for is simply this. I want to make sure that this isn't a false secondary high that the market just ran up, hits stops, and then gets ready to roll over, as it did in this case. Notice our volume indicator. On balance volume made a higher peak high. Our volume indicator did not. It actually made an equal to lower high, and it was the momentum of the market that showed what a term we reference as bearish divergence, meaning the price made a newer high and the indicator did not make a corresponding higher high. It made a lower high. So the indicator reflects a lower participation of volume, thus a false or weak rally. It means it's susceptible for a deterioration. It means it's susceptible when you get under divergence patterns. Markets tend to be vulnerable for declines. I'm actually one that looks for, and this is one of my premium setups that I look for, that I teach in all my seminars and courses, to look and spot for these divergences in the price to the indicator. And what indicator? When it comes to day trading, I look at the volume action, and I'll go through another example as well. But let's take a look at what the topic is notice that this candle, this red candle, closed below a prior last conditional change top, and it wasn't until this candle that occurs with a PPS warning signal and the market closes lower than all prior past lows. At that bar, now you can initiate a short position. The confidence level should be extremely high that you can take a short trade at that zone. And where would your stop beat go? right above the high of the last conditional change, the Ruth color fuchsia right there. This is a prime example of where we would look for a day trade to sell against that loss of momentum under that condition in the marketplace. So using an 89 tick chart, or whatever it is, a 5-minute chart, for example, a 15, it's the same methodology that we use. And for day traders, tick charts, there is an advantage to some of the methodology, but under any condition, you know, I'm not here to endorse nor oppose a tick chart. But needless to say, when we're using, and just to share with you, that our indicators do work on different styles and different methodology of time frames, whether it's point and figure, whether it's tick charts, or whether it's bar charts, or whether it's candle charts. The whole methodology works the same. There's a breakdown of momentum, number one, and that the high of that time frame acts as resistance. And so you can clearly see every time we're starting to form and formulate a trend, we generate a new last conditional change. Now, I didn't sit here and draw this stuff in because this is the indicator that we've programmed. And notice that the same setup that existed over here, downtrend, breakout, close above last conditional change on a momentum with the volume, exists right here. Now you have an upside swing, a classic bearish divergence pattern, and now we go back into another flip to the upside. And in a trading range, in a narrow trading range environment, this is the kind of trading, two-sided trading. And that's one of the mantras that if you've been in the trading room all week with me, you know that's exactly the kind of calls that we made for trading this week. Two-sided trading, which means you're quick on getting out of any longs, you're quick on getting out of shorts until the market has a higher time frame breakout. In trading ranges, the shorter term time frame, whether it's an 89 tick or a 1 minute, 3 minute type of situation as a day trader, works fairly well. This methodology helps to determine in the trading ranges, it tests the upper boundaries to the lower boundaries will work well. And the last conditional change paints a picture, both not in showing you where to place your stop, but also showing that there is a defined trend, and that if the market closes greater than a last conditional change and generates a buy signal, there's a trend reversal. If it also reflects that there's an increase or a shift in volume, and you can see the green line starting to point up, but more importantly, momentum of the volume is moving up, then you have a little bit more to maybe sink your teeth into. So the last conditional change can be found simply on your, if you go into your insert analysis technique, if you don't have it on your charts, and you just simply go LCC, JP, LCC, last conditional change bearish, and LCC, last conditional change bullish. All right. So Jim, thank you for your question. I hope that expressly answered, and it was a really good question, because a lot of people, and you said, I understand that you might not deem appropriate for today's planned discussion, and it is expressly appropriate. And you said, it says you wanted success or failure. Well, this is allowing me to do very well. So I'm imagining it does require one to do a lot of screen time, but it's rewarding for you. Jim, thank you for sharing your work and how you apply my indicators and my methodology to your trading style. And thank you for allowing me to share it with individuals. If I may be so bold as to now eliminate format analysis technique and eliminate, I'm not going to remove, I'll just turn it off, on balance volume. Again, there's two main components with the person volume indicator. A, it's a moving average trend of the move of volume in terms of percent. And there's a momentum indicator, which is a zero line histogram. So just in case you can't or you don't notice that the volume is starting to dissipate, you may be able to notice that the histogram is making lower highs and the bars are starting to do what? Get closer to the zero line. Ironically, when you get a volume crossover, this is not good. It shows that whatever uptrend the market was in, it's starting to lose momentum. And then it's susceptible for a sell or decline. And then when you get a price trigger, again, I don't think we need any more price indicators. So you don't have to have a Bollinger Band, a stochastics, a CCI, a MACD, God knows what. But I think it's more impressive to have the right indicators on price, but combined by looking at the condition of the move. And the condition is that volume tool. And you can clearly see as the trend is starting to move down, the trend is moving lower, and you see downtrend by red candles. Expressly look at the volume tool. It's moving down and strong. It shows that there's strong conviction of sellers until right about there. And that green candle shows, oops, we have a change in momentum, and now things turn positive. And as soon as that histogram turned positive, by the way, kind of that's when the magic occurred, right? As soon as the histogram turns green, that's when the magic, the bulk of the uptrend takes place in that environment. As soon as the histogram turned red, the bulk of the trend. So you're not going to be able to maybe sell the high and buy the low, but taking a chunk in the middle. And you will notice that that's when the chunk of the middle really starts to accelerate the downtrend, was when the histogram component crosses over that, and that tells you that there's more force in volume action and more participants. So if you're short, that's what you want to see. You don't want to be the only one playing in the band, so to speak, a one-trick pony. Now, that was an 89 tick bar, and I'm going to turn this over and kind of reflect a higher time frame. And how would it work with, for example, a 15-minute chart? So if I may be so bold, we'll go over here and look at the 15-minute chart and compare apples to apples. So first thing we're going to do is go to scale on balance volume, and then next thing we're going to go is scale ours and put it all back into action again and hit close. So case in point, let's take a look. Here's a PPS buy signal that occurs in the marketplace, and you have a last conditional change. If I change and go to the bearish and I go to color and I change the color to the Ruth, you can clearly see we closed greater than. You can look for confirmation, and we're going to zoom up into this time period just because we should. And so let's take a look at the two, whether this was, again, interesting. This is a 15-minute chart at 2 a.m. in the morning. Now, ironically, that was about right at 2 o'clock Central Time, so it's 3 o'clock Eastern. And that's right about the time when all the news services started to tweeting out late at this morning, all the news services. If you have news alert services were tweeting out like no tomorrow that President Trump had, and I quote, walked away from the negotiating table. I mean, okay, that wasn't entirely accurate, and thanks for waking me up and making me look at things, but that is important information. The funny thing is the market had already been down ahead of that move, number one, and that was actually right as the European session opened, the low of the day, almost just darn close to the low of the day. So if you're listening to headline news, as so many people probably were, and interpreted that as being bearish, geopolitical risks, insulting to the nation of Vietnam because President Trump walked away from a negotiating table, sounds pretty rude. You think about the relationship, oh, we're going to have more rockets launched over Japan now. It's like the whole relationship's blowing up. If you believed in that one headline news and you traded off that, maybe perhaps you develop a fundamental trading approach and sell the market thinking the crash is coming in. If you instead looked at the market and said, well, what is the condition of that sell-off? And you'd say, wow, right as we were against person's pivot analysis, pivot, the green line, it's interesting, both as the market was sitting here at this point in time, the momentum of the volume started to improve. For if you're bearish, that's a bad thing. If you're bullish, that's a good thing. And then as you generated a buy signal, you start to see the upside momentum of the market. Now, in this case, on balance, volume was also confirming that move. So I'm going to give credit where there's credit due. The last conditional change identifies not just an LCC, but also the swing low of the move. So if you wanted to take that buy signal, you'd say, gee, have we cleared overhead resistance? Is there strong volume accumulation? And if I do, should I get in here because that's where my stop would have to go? And you may find that to be maybe exorbitant risk and not want to take that trade. And you'd say, I'll wait till it clears the last conditional change. And you'll notice it does so on this bar. On this bar, it closes below last conditional change. Now notice that here's a white line, here's a white line, and there's a white line. Notice what the volume's doing. It's appreciating. You can actually join this trade late, but notice what you're doing. As you join the trade late, you also have lower risk. From your entry to the last conditional change is lower risk. Now, unfortunately, as the rule of thumb is simply this: the lower the risk, generally the lower the reward. But this case, I think that following the move, and again, you're trading at 5 in the morning, but the methodology is very sound. The market is still forming and respecting the last conditional change, and the volume trend, albeit it's light, is still positive. It hasn't crossed below a zero line, not until about here, which is the opening this morning, right ahead of the GDP. But even on a 15-minute chart, whether it's a sell signal on the way down or a buy signal on the way up, look at the sell signal and look at the condition of the momentum of the indicator. So over here, the momentum of the volume indicator was reflecting that sell signal, at least at approximately 2200 hours, was a valid signal, and there was participation in the market. So the last conditional change, resistance, the resistance, the resistance, the resistance, was helping to define, at least from a stop placement, or if you are going to get a buy signal, you would want the market to generate a close greater than the last conditional change. So whether it's a 15, an 89-minute, whether it's 2 in the morning, whether it's 4 in the afternoon, more case studies looking at the Dow. Again, it's that zero line component. Here's a high close doji. This is yesterday, the mini Dow. Look at your buy signal setup. You see that you have a breakout to the upside, new last conditional changes that are in place in the market, and you can lean against those as areas to place your stop with improved volume. Now, I would also like to add, in our algo trading room, if you're day trading, one of my favorite, and what we teach in the room, and we'll go into the algo room here real quick. Now, whether you're trading the Dow, whether you're day trading the S&Ps, whatever you're day trading, doesn't matter. What we find, or what I try to help people with and understand, is if you're trading at least in the E-mini S&Ps, one thing that we have down below is a 5-minute trade in the ES, and we have a 5-minute trade in the spiders. Well, why do we have the spider? It's the cash ETF. Because we also have, if you'll notice here, the advance versus the decliners. So one indicator that's pretty much pertinent and exclusive to trading equity or index ETFs or futures. So if you're trading the Dow, all 30 Dow stocks are in the S&P 500, right? So, I mean, they're closely correlated. There's different weightings of stocks that would influence the S&Ps over the Dow. The Dow, if Honeywell or Boeing had a really big day, you may see more influence on the manipulating the price movement in the Dow versus if Boeing had a really good day and all the energy stocks went down, the S&Ps is underperforming because of that sector weighting difference. But on average, if you're trading in the market, by understanding when should I take a buy versus a sell, if the market is generating a buy signal and closes greater than pivot, and this morning we had a couple trades that worked out very nicely in a market that we were expecting a two-sided narrow trading range environment. And so what you would want to see, if you're going to be taking a buy signal, then you would want to see not just an accumulation of volume lifting that signal, but you would also want to see the trend of the advancers versus the decliners. So if you separate the two, at this point in time, at approximately 11 o'clock this morning to 11:30, and you will notice that as the market started to move up, it's because there was more accumulation. More stocks started to turn positive on the day. And so if we note that the 5-minute buy signal on the spiders also came with a small uptick in the on balance volume indicator. Now let me just go in here and go to format analysis technique and see if I've already got it loaded, which I don't. So let's add it and I'll share and reflect. We'll go over here to insert analysis technique. Go to JP and add volume indicator. So we'll just line this all up, and you will note that as same thing that we were just talking about. Now this is the spiders. This isn't the futures. It's not the Dow. It's not a futures. This is the cash ETF. Kind of interesting to note that the market on that buy signal came with an uptick in the advancers versus decliner, and at that same time, the momentum of the volume started to improve. Now, what happened? It didn't go anywhere. What happened to the volume? Nothing. What happened to the stock? Nothing. The market did nothing. But, if we take a look at a time period as in like yesterday, the advancers starts to increase, and you get a buy signal on an improved advancing versus declining line. What is the momentum of the volume doing with the volume indicator? Wow, it turned green, it turned positive. And what happened? Magic occurred. So I think to improve your odds of day trading, and this is one of the things that we have up in our algo room, is expressly for that purpose. Now, an algo room's the algo room's an algo room, and we're looking for signals. Now this morning, this particular strategy generates sell signals and covers, and it generates buy signals, ironically. And then the settings here, this is not an overnight system. This is just simply a system that takes into consideration buy signals, and this is based off the format strategies real quick. Algo 17, you'll notice on this strategy, it trades, it starts at 8 a.m. and it stops at approximately 1:45, 2 o'clock. Those are the best at Central Time, by the way. So it doesn't trade all night. It won't take a trade. If it's in a trade, it doesn't reverse the trade, and it exits the trade at the end of the Globex close, by the way. You see exit end of the day. So in the algo room, we can only take trades anyway that you're in the room. But these particular setups or these particular strategies are designed to take PPS buy signals and PPS sell signals. They don't use the last conditional confirmation because we are looking for better confirmation using A, volume, B, also looking at the advanced decline. And that's why this particular algo is on top of the SPY, just for that particular reason. All right. Now, Other platform and uses that we have in the live trading room are, again, trading an ETF to help traders identify if you're buying an S&P futures and there's an increase in the advancers versus decliners. We would also want to see a decline in volatility, the VXX, and this is a VXX model. This is one that just has started since the beginning of the year. This is a VXX. The settings here, this is I would call it a swing overnight trading model. And a couple things that this does. You'll notice, look at the profit factor on this. It's 4.25. Most of the profits, and if we eliminate the longs and we stick with just shorts, you will notice that there's a hell of a difference between longs and shorts, right? So by default, this is a system that we shouldn't even take longs in the market, by the way. But we have it for both for various reasons. A, to help initiate or identify, by the way, there's a buy setup in the VXX that might signify a short-term sell signal in the spiders, all right? Now, look at the percent profitable on the short side. It's sick, 83%. 83%. So obviously, it has a bias to the short side. Doesn't mean that you can't trade the long side, but it's there for primarily great confirmation of saying, hey, what should we be doing, long or short? This is an algo strategy. You can always, as we talked about today in the trading room, I said, hey guys, this thing went short ES and the conditions are improving. I would manually overwrite that and cover that position. If you were in the live trading room, you heard me state that. Now, in addition to that, we also have the spider, a 60-minute system. And a 60-minute system, if we look over here, again, same time, well, since the beginning of December, this took longs and shorts. Look at the performance. Obviously, short trades, even going through December, is not great. But by default, it does a lot better on the longs. The profit factor of 3.96, pretty sick. So with that stated, these are our ideas and trade concepts that we look for profit targets, and then it uses trailing stop functions. And so most of you should probably at this point say, gee, I wonder what John's trailing stop functions are. And you may be surprised to find out. And let's go to Insert Analysis Technique, and let's put in the LCC and the bullish and bearish, and hit OK. And now we will see the coincidence factor. Now, the LCC in this case, we've got them color-coded a little bit different, yellow and bright blue. So apart from a long entry, in the marketplace, you can clearly see the last conditional change, last conditional change, last conditional change. If it breaks down and closes below last conditional change, it's going to take a short, but it's going to get the hell out of Dodge quickly. And when it breaks out and gives a strong buy signal, it's going in. Notice this is a fuchsia line. Do you see that fuchsia line? Notice that fuchsia line, what a coincidence, is right a tick or so under the little blue line. What is the blue line? It's the last conditional change. The same thing exists here, the blue line. So, here's a system that does use absolutely the last conditional change, which, by the way, this was the intended stop on that particular trade. The market opened lower and traded, and you exited the trade on the low. So the model that would be best used for taking and making trade decisions, whether it's on the spider, here's two profitable systems that incorporate, from an algo perspective, they incorporate that last conditional change. In fact, we see that with all the systems that we have for day trading models, whether it's the crude oil 15, crude oil 5-minute, Euro currency 5, or Euro currency 15. And that's in the algo room of our live trading room based off systems and strategies in the using the Algo 17 product. So we've had a lot of really dynamic things. Now, based on using Person's pivots for VIP members, the next release of a tool that we've been very fond of, by the way. In fact, how strong do I feel about last conditional change? We have a last conditional change, whether you get a strong buy signal or sell signal, it can be found on the radar screen. So it defines whether or not it is just a regular sell signal or did it break a last conditional change. Interesting to note that this is a great time to do the PUG member group meeting because it's the last day of the month. And so what does that mean for the last day of the month? Well, it means, hey, where did we end up on the last day of the month? Did we generate new monthly sell signals? Did we get a daily close underneath the last conditional change? Well, let's take a look at bond futures. And bond futures, as you can see, they generated a sell signal yesterday. And then note the white line in the sand. And I'm going to expand on this. Did the market close below the white line in the sand yesterday? No, it did so today. So it finally broke below a low or a last conditional change that has lasted almost the entire month. If there's more follow through and it remains below that line in the sand, and you start to see an increase or at least a trend in volume, it's going to be defined as a developing stronger trend over time. That would mean that the bonds are starting to maybe roll over, and this could be proven to be an important double top in the market. So that's number one. Number two, let's take a look at the weekly chart and say what the weekly analysis on bonds look like. So ironically, today's not the end of the week, it's the end of the month. So tomorrow's the end of the month, right? We have a potential for a weekly low close doji on the bond market, as we've been in a PPS sell mode for quite some time. It just hasn't gone down. It hasn't gone up, but it hasn't gone down. But notice that the last conditional change, if short the bonds, there's where your stop is. If you're short the bonds or looking to get short the bonds, you would definitely want to see more price depreciation, and I want to see the condition of that move kind of show a gathering of or a weakening of volume and an increase or decrease in the volume. In this case would be a downdraft, means there's more selling pressure coming in the bonds. Very simply put, look at the sell signal that existed way back here in September on a weekly basis. A sell signal closed below the last conditional change, gang. And actually, that sounded like a rock group, right? Wasn't Joe Walsh? Never mind, sorry. This is the last conditional change, all right? And so the James Gang, that was the name of it. Anyway, sorry, guys. And if you'll notice here, look at the volume tool. So whether it's a 89 tick on the mini Dow, a 15-minute on the Dow at 2 in the morning, whether it's the spiders, whether it's the bond futures, whether it's a weekly chart, you know, if the market is going to form a double top, by the way, this is another classic example of where the person volume indicator is a much more sophisticated and powerful tool to identify that real inherent strength or weakness in the market. As the bonds made that little top up here in September, notice that the on balance volume actually made almost a newer high. So if you were looking at the on balance volume, you say, hey, this is a buy signal, it looks like a breakout. And I'd be telling you, hey gang, that's a very weak volume. It's actually showing divergence. You can see volume divergence in the marketplace with our indicator, but not with on balance volume. And probably since a lot of people in the general public now use this, and I did go on a speaking tour and help popularize on balance volume back over a decade ago to a lot of different groups across the country and a lot of Thinkorswim users. And in fact, it really got popular on Thinkorswim. But what had happened is I just think that as maybe dynamics have shifted towards ETFs and options. I think volume trends have kind of been diluted a bit, and taking a look at the momentum of volume and looking at percent change of volume helped filter out things and give us a better look-see of what the participation rate is in the trend of the move. So if you can stack every bit of odds in your favor, I mean, maybe you don't go short the market, but by gosh, with that outlook of the market weakening, you're probably less likely to go long and lose money. So just like the same concept of what we were looking like with the 89 tick mini Dow, when the market generates a buy signal, and there it is, and then you can wait for a confirmation, and let's go clean this up a bit, and we're going to format and put on the Ruth W color. So clearly, we can see that in this case, a zero line histogram, that sell signal closes below the white line, confirms that's a very strong sell signal. Your last conditional change becomes your first stop, new stop, trailing stop, new stop, and as the market sits there in a sideways range for a while, we start to see a shift and a pattern building. Look at the momentum of the volume. Now, let's take an equal respect for on-balance volume. Well, it still reflects a zigzag bottoming pattern. We have a better identification that this is in a form of accumulation. When you get a PPS buy signal, look at the magic happens when the histogram of this indicator turns green. Whoa, it really shows that there's participation in the market and it's off to the races. The last conditional change, last conditional change, last conditional change. Now, if you're an option trader and you're trading bonds, maybe you're an option trader trading TLT, start selling maybe weekly at the money options, or maybe a 40 delta, 50 delta, slightly at or out of the money as the market maybe opens unchanged. If you're in a bullish environment, you can start selling put premium. That would be another strategy system that you can develop over time using the buy signals in a like or kind ETF. So there's many incredible, powerful uses for this tool. It's amazing. And it really is worth its actual weight in gold in this case. So with that said, I do have one other fabulous, not to be too promotive, but for VIP members, I wanted to go over and share this with you because we've had the liberty, since I use this kind of tool. Let's take a gander here real quick. As you can see, a trend in the market, and I'm going to change this up real quick. I'm going to change this to a 60-minute chart. And how do we utilize last conditional changes with a 60-minute chart and include pivot points? So whether you're using a pivot point to help you identify for swing traders, all right, and for position traders for that matter, if a market generates a buy signal, so here's a spider way back in January 30th, right, all way back then. One of the things that I like, if you'll notice here, you'll see a couple little nuances. First, you see one long blue line. What is that one long blue line? That one long blue line represents the weekly pivot. So when we get persons pivots that identify a bullish outlook, generally speaking, the pivot is higher than the preceding or the prior time period's pivot. But to be more concise, when a market closes greater than the pivot and the daily pivot, that's when you might see a stronger trend develop. So it's the fuchsia color is not a support, it's actually the daily pivot. So when the daily pivot is over the weekly pivot, it helps to support the fact that the market's longer or higher time frame outlook is valid. In other words, if I'm expecting this week to be bullish, the person's pivot indicator suggests higher high, higher low, and it's bullish. But if the daily pivots are below the weekly pivot, it means there's a conflict in the indicator and or the outlook, and there's some distress, and it's not maybe a true bullish outlook. But when the daily pivots start to trade above weekly pivot, it starts to support a higher time frame is in sync with the lower time frame. I hope I made myself clear on that. But I mean, clearly you could see pink above blue is good. And if market supports against blue, even better. Pink above blue is good. Pink above blue is good. Well, the funny thing is we're going to go to format analysis, and you'll notice it says J person pivots all underscore V1. I'm going to turn status. Actually, I'm going to just actually remove it. And I'm going to say, well, interesting. I kind of like that. Where did it go? I want it back. Well, VIP, we haven't released this yet, but it is an absolute important tool. It's not something brand new or something that's eye-shattering. It's something we've been using, but it just filters out, and so you may not want the support and the resistance, too many lines on your chart, but it'll help illustrate if you're looking to trade the market and you got a short-term buy signal and it's getting above the daily pivot and the weekly's in a bullish mode, this might be the trade concept to give yourself a better edge. So just we'll go down to insert analysis technique, and we're going to go right up here to J person. We're going to rename this file, so it'll probably, I don't know, it's coming soon. So if you're a VIP member, this is a new it's kind of like an old way of looking at things that I've been teaching for decades, but it to me it helps for stock traders and for swing traders. It helps to define a stronger trend in the marketplace. And if, again, the daily pink is above the blue, it supports that the higher time frame, if it's a bullish mode, is valid. That's the key takeaway. If the blue is showing higher high along the way, right? And all of a sudden we start to see the pink go under blue, and you start to see that for a couple consecutive days, that might be a problem for bulls. And that means we would be more watchful for sell signals. And remember, if the trend is up, you get more fruit off the tree by going long. If the trend is down, you get a lot more fruit off the tree by being short. So the idea is, what tool can help us to define bullish and bearish conditions? And that's what we've put together as far as this tool. It's not a strategy. It's just an additional tool to help keep you focused. In our live trading room, in the main room, we've created these types of indicators, or this setup, this layout on Genesis. In fact, let me just share with you one quick one here, and I'm going to change this up, and I'm just going to change it to, like, say, XOP, oil and gas exploration. So everyone's bullish oil and gas. I was bullish oil and gas. Notice that the blue is below the prior week's blue, and the pink falls below, and what happened? The market did what? It went down. Owie, it went down. So that's not illustrating very strong power. But when the market closes back above blue and the pivots are above the blue, that illustrates maybe a nice swing trade, a reversal using daily against weekly, right? All of a sudden, this is exactly my point that I was just talking about. If all of a sudden the weekly outlook is bullish, but daily pivots are below weekly, it shows that there is a change in sentiment. And look what has happened. The market started to deteriorate, and the pivot now is not acting as support. It acted as resistance. This, combined with your last conditional change, really is a powerful way of identifying the market's dynamics. So this is what we have for you guys. And if you're not a member of the pub group, certainly get a hold of us here. You can contact us via our office at personsplanet.com. And the phone number is, and I'll post it in the room here, it is area code 561-779-79 excuse me, I take that back. It is 561-655-1881, and my name, I know my name. So you can contact our office or simply send an email to either myself or to Mary at mperson@personsplanet.com and say, hey, I'd be interested in learning more about becoming a VIP member. The volume indicator is a part of the VIP package. The LCC on the radar screen is a part of that. There's so many dynamic benefits of being a PUG member. So with that said, we've added these. If you're not a PUG member and you're okay, that's not a problem. But the this pivot, it's just a bonus of what we give to our clients, especially our VIP members. So look for that. It's an exciting tool. We're using it in the trading room, especially as we start to see shifts in different sectors like biotech and semiconductors, and it helps give great confirmation. So I thank you all for attending. That does conclude our time today. Look forward to seeing you the next time around, and we'll be back in another month with another update on our PUG member group meetings. Thank you, everyone.